Good day. Dan Davis, ADK Wealth Advisory Group, talking with you today from our St. Louis office, where you'll see some beautiful spring colors. And that's really kind of the theme for what's happened so far in the first quarter in the financial markets. We saw in the summer of 2015 the beginning of what we believe is a sideways market, where the summer fell down pretty steep, fall recuperated, and then January 1 through February 11th, we saw the worst beginning to a stock market that we've ever seen in the United States calendar history. And then as spring came in, the markets pulled back up, and now as of today we're above where the markets were to begin with. And while no one really knows what the future holds, our expectations are on the pre-side of election that we should expect the markets to be pretty choppy. If you take a look what we expect beyond the election, we would expect that historically you see, regardless of which party wins, many times you see that the financial markets get a boost just because the uncertainty is over. In general, we have a theme of what LPL's research calls lower for longer. What I mean by lower for longer is lower interest rates, lower stock returns, lower energy prices, lower inflation, lower for longer. For example, if you take a look at as of today, the U.S. 10-year Treasury is under 2%. It's about 1.75. Interestingly enough, when you compare that to the developed world, that's pretty high. So, for example, if you looked at the equivalent 10-year Bundesbond Treasury, you're basically looking at less than 1%. Same thing if you look at the Japanese 10-year. So globally, we've had a lot of central bank intervention that's been there to stimulate the economy. As a result of that, we see lower interest rates that we believe will be lower for longer. We do believe that we've started a period where they'll probably be going up. We saw the Fed raise rates for the first time at the end of last year, and we believe that they'll raise rates again this year, once or twice. But we do not believe that they'll go screaming up, lower for longer. And when you take a look at historically speaking, election years create a lot of volatility. We also have issues with Russia, Syria, China that create problems. You could toss in Brazil in there as well. But when you watch Fox Business or some of the other business sections, you'd almost think that the sky is falling. But yet, when I was at a symposium put on by the St. Louis Federal Reserve, they said the likelihood of a recession occurring in 2016 is like 1 out of 4. So, call it like 20%, 25%. LPL's research team is in tandem with that. So low likelihood of recession in the U.S. in this calendar year. The GDP expectations for the U.S. is about 2%. And globally, the IMF expects global GDP to be above 2%. So I think instead of the sky is falling, it's just lower for longer. Low growth, low returns. Unfortunately, pre-election will probably have more volatility affiliated with those low returns. I'd still have concerns. You've heard me talk about this for the last couple of years. When I look out 2018 to 2020, when I take a look at the debt that exists in the U.S. government, the European government, the Japanese government, and now many of the different emerging markets, it's really at elevated levels. Historically, when you see major financial crises, there's a process that occurs. Excessive debt, that's present now, that leads to excessive valuations in some equity type of instrument, whether or not it is stocks, real estate, commodities, whatnot. That is not present at this particular point. In our view, valuations are towards the high side, but they are not excessive. So in this process, you have excessive debt, excessive valuations, which means people are getting good returns on investments, which then drives more investors into the marketplace, which then drives it to ridiculous levels that we saw in 2000 in the stock market, we saw in 2007 in the real estate market. Those conditions are not present. So my concern 2017 to 2018 as a beginning point to out to 2020 is just where will the success of debt within the developed world governments, where that really take us? And those chapters aren't written yet, so we'll do our very best to keep our pulse on that and keep you abreast of it. But in closing, I would basically say lower for longer, choppiness leading up to the election. Post-election, we expect the markets to give us a little bit of a bump. We'll continue to do our very best for you. In addition to all that, if you've received this on Facebook, if you would like to share it, we'd appreciate any possible referrals. If you've received this on email, feel free to send it out to any family or friends that you care about. All of you that are clients of ADK Wealth Advisory Group, we thank you very much for your business and your time. Have a great rest of the day.